Okay, hi guys, hi, mko salama? This is SpaceYaMagari. My name is Magari, and I would like to just take this opportunity to invite you guys to this space. So let's share guys, let's tell guys where we are so that the conversation starts. We already have Mr. Jimmy in the space, that is James Ndege from KRA. And we just want to start this conversation in a few minutes, so let's share with guys to sambaza hii injili, sambaza injili watu wajue mahali tuko. Hii ni space ya Magari. Mimi naitwa Magari. I'll be doing this today with watu wa Magari, so everyone ambaye uko wewe ni mtu wa Magari pale, you have the chance to ask your question directly to KRA. Uliza swali yako ili tuweze kuengage KRA. So Mr. James is in the space. TDI, you're in the space. Turbo Diesel, you're in the space. I'd like to just give a shout out to Tax, Avid, Chobos. I see you here, Sang. I see Ruth, Njuguna, Kahiga, Waidaka. Watu ni wengi. So, wacha tuite kila mtu. I know we had the first link and ikaanguka. Please kindly just let's tweet using the hashtag SpaceYaMagari. We have Sir Kelvin and the team, that is Akina Turbo. They are tracking the questions of the hashtag SpaceYaMagari. So if you have any question to KRA today, just tweet it using the hashtag SpaceYaMagari. Usiogope, uliza swali yako. Leo ni siku ya kuuliza swali to KRA. Asante. Thank you so much for making time to join this. So kama unaingia pale kwa speakers na uko na swali, you ask. Tukisonga mbio. So yes, in the meantime, this session tunaanza na Mr. James directly. So wacha tuanze na kujua Mr. James. Mr. James, wewe ni nani? What do you do? Where do you work? And let's be able to wacha tukujue kwanza kabla tujaanza kudeal na KRA.
Thank you, Bob, and I can see the other guy is called Turbo Diesel, and I don't know whether it's Turbo. But so my name is indicated is James Ndege. I work here in Kenya Revenue Authority and department called Customs and the Border Control Department, and a division called Risk Management Division. I'm in charge of valuation of goods and classification of goods in customs. I'm a chief manager in charge of that valuation of goods and the classification of goods. Where valuation, I think, is the major issues that we are touching today on how these motor vehicles are valued, and I will also touch shortly on how we classify these goods. Back to you. I think that's a short introduction about James Ndege.
Thank you, Mr. James. And are you a driver yourself? Are you mtu wa magari? Are you an enthusiast in the car industry?
Yes, I am. And I do follow blindly using other links handles on this SpaceYaMagari. I've followed a number of conversations that we are having, and we also enrich ourselves on the discussion that you normally do, because we need to get right and information. And I know there are people in this space who understand more about these motor vehicles that we normally value. So I do, and I'm also mtu wa magari, sio wa ndege peke yake.
You know, actually, wakati umesema mtu wa ndege peke yake, there was somebody who raised the question, akauliza, mbona tunaleta mtu wa ndege kwa SpaceYaMagari? And it's your name actually, right?
Yes, it's a name. Ndege aeroplane.
So karibu sana kwa SpaceYaMagari. Thank you so much for making time. Guys, as you have heard, we have Mr. James Ndege from the Customs and Border Control Department. That's the chief manager there in a division that deals with valuation and classification, if I got it right. So, Mr. James, there's always the big question of why KRA, why every time you talk about importation of cars, kuna tu mtu anasema KRA inatufinyilia. Can you probably just tell us what is the role of KRA when it comes to motor vehicle? What does it do and where does it come into play? Is it a necessary agent or authority when it comes to this?
Thank you, Bob. I think we all know that KRA is one of the law enforcers, that we enforce various acts that require to correction and accounting of taxes So what we normally do is to look at those acts and we enforce them to ensure that all the taxes that are supposed to be payable are paid, and we account on the same.
So you work to enforce acts. So these acts are not really set by you, but they're set by Parliament, if I got that right.
Yes, the acts are set by Parliament, and also we have some regional acts. For example, we have what we call East Africa Customs Community. East Africa Community Customs and Management Act 2004 that we enforce in the partner states. We have another like the VAT Act that are set by Parliament. We have the Excise Duty Act that are set locally here in Kenya. Miscellaneous Fees and Levies Act, which all we enforce, and they are products of Parliament.
Okay, so
KRA acts that we do enforce.
Oh, so KRA is more of an enforcement agency rather than a collection agency. The collection is part of the enforcement.
Now that enforcing, now we ensure that what is spelled in the act, it is actually accurate, where correction of those taxes is part of it.
Okay, so when it comes to motor vehicles, and when we now narrow it down and come to motor vehicle, I understand there are different products that you guys deal with. There is general goods, and now let's talk motor vehicles. What really tells you what to tax? And before even we talk about what to tax, what is there to be taxed?
Now, when we do taxation of these goods, in particular now our case is motor vehicle, first we have to classify these goods. In classification, sometimes I might go more technical. We have what we call the harmonized system. This harmonized system is a system that is world over known by WCO, World Customs Organization, that has classified all the goods that exist within the planet. So with reference to motor vehicles, goods are classified in section 16. Motor vehicles, they are classified in section 16, and in particular to what we call chapter 84. And that chapter, not 84, 87. Now chapter 87, they have what we call various HS codes. Now this HS code is what the tax rates are pegged upon. So if we have motor vehicles, we have like tractors. Tractors are classified under chapter 8701 heading. And then the tractors, their parts and so on, they are classified there, and their duty rates are given there at EAC level. That's at East African Community level. Then we go to other vehicles for transportation of people of about 10 or more. They are also classified. Then above 25 persons, they are classified. So using that classification, then you classify each motor vehicle depending on how it has been described in this harmonized system, what we call here in EAC, common external tariff. So we classify them, then the taxes are based on that particular classification, or where we have classified these particular goods. Bob?
So probably you can give us what are the basic classifications that we have when it comes to motor vehicles, and so that we start from there.
So let me take an example of if you have a four-wheel drive vehicle, yes, for transport of 10 persons. Then if it is unassembled, because we have those people who assemble vehicle here in Kenya, it is classified under 8702/4011, which attracts import duty of 0%. If it is not assembled, if it is not unassembled, implying that it is assembled, it is classified under 8702/4011. 4019, which attracts 25%. Again, it goes ahead. If this vehicle is 8 of diesel or petrol, it is classified elsewhere. So for the purpose of that, we are able to levy taxes based on that classification. So anything that when you bring documentation to customs, the first thing we need to ensure is, what are you bringing? Is a vehicle. Where have you classified it? What type of vehicle? Where have you classified it? Then other things now come up.
Okay. So ideally that classification is what you call this is the HS codes. 87024011 is now the codes of classification.
For that particular item that I said, there are so many of them.
Yes.
There are over 5,000 HS codes.
Mm-hmm.
Depending on the item that we are classified, we can classify it in a particular HS and then look for example, if I'm looking for a vehicle of cylinder capacity exceeding 15,000, but not exceeding, not 15,000, 1,500, but not exceeding 2,500 cc. If it is unassembled, we classify it under heading 8703-3210. If it's assembled, we classify it under heading 8703, HS code 8703-3290. So once you have classified that, then that's part of classification. We have what we call the rules of evaluation, or what we call the evaluation code. And the evaluation code, it has about 6 methods that we do employ to value these particular goods. So before you start computing taxes, you must understand what is the value of this particular motor vehicle. And we have one of the method is what we call the transaction value method, or what is called method 1. Under transaction value method, we look at the invoice price. How much did you purchase this car? Either from Japan, from Singapore, from Australia. So once we are satisfied about, of course, there are conditions that one should meet for transaction value method to be applied upon your goods. So if we are satisfied, then we can use that particular method. Then we have the second method, which is we call identical goods method. Then we have similar goods method. We have deductive method. We have a computed method, and the last one, which we call a fallback method. So those are the methods of valuation that we normally apply to get the value of that vehicle. So once we have gotten the value, then is to apply various rates that exist. For example, if we are declassified this vehicle, where the import duty is 25, excise duty is 25, VAT is 16, then we compute the taxes in a nutshell.
So classification advises on how much we are going to be looking at when it comes to the rate.
Computation.
But the valuation, and the valuation is where now you guys are going to be looking at how much this item is worth.
Yes, that is it.
Okay, sawa. Mimi nataka turudi nyuma kidogo, Mr. James, and I want us to just look at it from somebody who is very green, somebody who wants to start motor vehicle purchase. Amefika pale, agent amemwambia amemalizana na cabs, now ameenda KRA. KRA wamesema tax ni 600,000. This amount, where is this amount being arrived from? Because I hear there are different processes that you guys call about the CRSP. These are terminologies you will hear when it comes to that process. So I would want you to now tell us, what is the basic or the standard importation process when it comes to tax? Ikifika kwa customs, what happens at that desk?
Okay,
umetuambia classification, umetuambia valuation, but now tell us from a layman's perspective.
Thank you. Assuming I am turbo diesel, yeah? I've imported my Subaru XT from Japan. Once I import this car, there are some documents. Of course, there are those documents you are given. You make payment either through the bank. You transfer the money there to Japan. And once upon transfer of the money, the car will go and inspection will be done in Japan to confirm whether it is roadworthy. Then they will send you a bill of lading. They will send you an invoice. And also they confirm the expected, even the vessel. And they will give you an expected timeline when this vehicle that you have imported will arrive in the country. So once you have this document, and when the car arrives in the country, what Talbot will do in customs, the representative, we have what we call the customs clearing agent. You get a clearing agent. Once you have this clearing agent, you surrender to him this documentation, that is the bill of lading, the invoice, and he will do a declaration. A declaration is a document, a customs document that he will do in the system, either in a Simba system or in our system called ICMS. So once he does that declaration, it allows self-declaration using the documents that you have been given by the person who has sold you the car from abroad. So once you do that, of course, you should have lodged an IDF. There's what we call import declaration fee document. Then together with that, now you lodge this document. There is a link they normally create in KenTrade. That link, you upload the documents in that particular link, such that somebody who is in CAPES can see the same document. Somebody who is in elsewhere other than KRA can see the document that you have lodged. So once you do that, the clearing agent now will do the self-declaration. And once the self-declaration is done, the documents now come under inspection of customs. So if the vehicle that you have imported attracts 25% import duty, then the clearing agent will include that 25% import duty. If the vehicle attracts excise duty of 35%, you will indicate that the excise duty for this motor vehicle is 35%. And the system will compute the taxes automatically, and these taxes, they are further scrutinized by a customs officer. If it is in the case of Simba system, when vehicles are declared under Simba system, we have officers who work under a section called Document Processing Center. They will review the document that you have attached, and they will process that particular entry upon payment of requisite taxes. So what I need to talk about is how these taxes are computed. And I saw, when I was part of the forum I was doing on this space, I saw a number of questions, and most people were responding. Actually, they were giving right answers on that. So for instance, if your vehicle costs, we have classified this vehicle where import duty is 25%. And then excise duty is 35%. Excise duty is 35% for vehicles with engine capacity of 3,000 cc. That is for diesel engine. If you have a diesel engine with more than 3,000 cc, excise duty is automatically 35%, as it is given in the Excise Act. And if it's a vehicle of petrol, again, the excise duty is also given. Then there is VAT of 16%. However, during Corona season, the government gave concession and it was reduced to 14%. Then there is what we call import declaration fee, IDF, which is normally 3.5% of the value. Then we have railway development levy, which is 2% of the value. And we have what we call MSS levy, what we call merchant and shippers levy, which is computed dependent on the volume of the vehicle. It has various formulas that are used to compute that MSS levy, and it's also dependent on the goods that you are importing. If you are importing goods that are containerized, MSS levy will be charged as per the size of the container. If you are importing something like a car, it will also be imported, it will be charged based on the volume of, that's the cube. You take the length, width, and height of the vehicle, and then a particular rate is charged on that. So if this vehicle costs 1 million, that is what we call CIF value. The CIF value includes the cost of the purchasing that car. Secondly, we have the insurance that you pay to the shipping line, or to the, not the shipping line owner, not to the shipping line, but to the insurance company to take care of in case of turbulence in the sea and you get the car maybe get lost, you get paid, compensated. Then we have what we call the freight. Freight is what you pay for this car, and it's paid to the shipping line. So that one forms what we call the CIF value. CIF value, sometimes we call it customs value. However, when you talk, there is a slight difference between the CIF value and the customs value, where customs value includes other charges. For example, if you imported this car from maybe Fukuoka, Japan, and the port of loading is not Fukuoka, it's going to a particular town or port of loading in Japan, that cost of transporting that car from where you purchased it in Japan to the port of loading, it's also added to the CIF. That's why the customs value is slightly different from the customs value. But in most cases, for cars, the customs value is almost more or less the same as the CIF value. So this customs value is what we use to levy taxes. Now, assuming the car is a 1 million value, so, and import duty is 25%. So you multiply, Bob will assist me to multiply that. You multiply 25% times 1 million. So you will pay import duty of what? 150. Bob?
I'm actually doing that with the calculator right now. Yes.
Now you will pay import duty of 150.
250.
Yeah?
If you say 25% of 1 million, 250.
Yeah, 250. 250. So this 250, then you add it back to the customs value. So you get like the customs value we said was 1 million.
Now we have 1,250,000.
Yes, 1,250,000. Then that now becomes what we call the excise value. So that one is what you multiply by 35%. If your car was more than 3,000 cc diesel, it will attract at 5% excise duty. So you multiply 1.25 million times that 5%. Then you will get the excise duty that you are supposed to pay. So how much is that?
Just a minute. 35% of 1,250. That is coming to 437,500.
437,500. That is the excise duty that you will pay. Then
for this unit.
For that unit. Then we need now to compute VAT. So for us to compute VAT, you need to get the VAT value. Now the VAT value is the customs value, which was 1 million, plus import duty that you paid, which was 250,000, plus the excise duty that you had paid, which is 437,500. So we'll give you the VAT value. What do you get?
So 1250. That is 1,250 plus 437,500. This is now adding what we got as the excise value.
Yes.
Excess tax.
Yes. What do you get?
437,500. That gives us a total of 1.687,500.
You are getting
1.687,500. That is 1,687,500.
1,687,500, isn't it?
Yes.
Then multiply by 16%. Will give you the VAT that you are supposed to pay.
So we multiply this by 16%.
Yes, multiply by 16%.
That's 270,000 of that.
270,000. Then now we compute what we call IDF.
Wow.
IDF could be the 1 million times 3.5%.
So 3.5% of 1 million.
Yes, it will be 35,000.
3.5% of 1 million. Yeah, that is 35. Yeah, that's 35,000.
Then there is what we call RDL levy, Railway Development Levy, 2%.
2% of what?
Of the value.
So we are going back to 1 million.
Yes.
That's 20,000.
20,000.
Yes.
Then there is that other levies, which I told you called the MSS levy, which is actually there is a formula depending on a particular vehicle that you are importing. Normally, it's a small figure, less than I think 5,000. I don't know, like a vehicle that you are importing, how much will it cost, because it depends on the vehicle.
What's the average that you have of such a rate?
It's normal around 2,000 to 3,000.
2,000 to 3,000. We work with 3,000.
Yes. Then there is what we call the inspection fee.
Charged by KRA?
All those they pay. There is a registration fee, the one you pay for you to get the number plate. I don't have the right figures they pay now. And of course, you have to pay the clearing agent. Some agents ask, depending on the size of, there are those who can ask 10,000, 5,000, 50,000, and depending on the negotiation that you have. So all this is what you pay. The clearing agent fee is not to the KRA, you are paying to the clearing agent.
Yes, yes.
Registration fee, it is an agency revenue we collect on behalf of NTSA, at the end of which we remit it to NTSA. Yes.
Inspection is charged by KRA, or this is a KEBS fee?
This is a KEBS fee.
KEBS fee. So this is the one that you either paid when the car was coming in or when the car was done at the country of supply?
Yes.
Okay. So yes. I'm just looking at this calculation. This is a unit that costed 1 million.
Yes.
It attracted 250,000, 437,500, 270,000, 35,000, 20,000, and 3,000 shillings. All these being, I'm actually just going to do a total of these taxes, if you don't mind. So I'm just doing 250,000. I'm also adding we got the 437,500. And I'm just concerned about these figures. Are they not higher than, even almost closer to the amount of this car itself? Because as of now, just adding 250 to 437, you're getting 687,500. Then you add 270,000, which is now what we have got. Let me just get. Yes, and then we are already now at 957,000. We do add 35 and 20,000 again. So that is 55,000, and we are looking at, wow, it's a figure that I would want to ask myself so many questions, and this is the question that a lot of people have been asking. Why are we at this point? Why do we get to these levels of taxation?
Now, you have seen, when I started, I said we are enforcing the rules that are here in Kenya.
Yes.
And import duty, I said the import duty is charged under what we call ECIMA, East Africa Community Customs Management Act 2004.
Yes.
Then the Excise Duty Act is there and is normally reviewed now and again maybe during the budget cycle. Then we have the VAT Act, which also is a local act that we do implement. Then we have the Miscellaneous Levies Act, which brings on board the IDF and the RDL. All this is what we enforce, and we ensure that the taxes are corrected. It is not something that KRA gets from the space and says you pay this. So it's enforcement of this particular law.
Wow. So this law, the one that we are actually looking at, because I've just looked at that specific example you've given, and I'm looking at total taxes paid are coming to 1,012,500 on a unit that is worth 1 million shillings.
It is true, Kelvin, and all members in the space. For vehicles that attract excise duty of around 35%, if you do it, the taxes that you are supposed to pay ranges between 101% to 106% of the value. So if you imported a car worth 2 million, you are likely to pay taxes of about 2 million plus. And if that car is of a cylinder capacity of a cylinder capacity of 3,000, more than 3,000. But if you import a small car, or maybe where excise duty is 20% or 25%, then you pay less than the value. But where excise duty is more than 35%, you pay more than the value.
And now this is the highest rate that you're looking at is 35%, is it?
Yeah, excise duty, the highest rate for motor vehicle is 35%.
There was a question about, let's go back to the CRSP, and this is where there was about, there is what you call depreciation. Where does it come into play? The year of first registration, where does this come into play if I'm looking at rates of 101%?
Mm-hmm.
Where does this come into play? Do I have the closer I import? If today I'm importing a 2015 vehicle guided by the standards, and somebody else is importing a 2020 car, are we going to go on the same rates, or are we going to pay even higher the closer I get to 2022?
Thank you, Bob, once again, and members on the space. Now, the issue of CRSP, first CRSP, what it refers to is current retail selling price.
Mm-hmm.
Now, as I started, I said we normally have methods of valuation. All these goods, when you purchase them, they have a value. And I know all of us, we normally go to the sites that normally sell motor vehicles, like the right SPT and the rest. And we normally see you can get the same Toyota Land Cruiser, maybe with a cylinder capacity of 2,700 retailing, maybe the same year, the same make, but they are selling them at different prices, depending on either the usage, whether it's an accident car, whether it's the grading of that particular car during auction. Now, some years back, world all over, you see, Kenya is one of the countries, actually Kenya and Nigeria are the biggest consumer of used motor vehicles. So for these used motor vehicles, they normally give a challenge when coming up with valuation, because you can't determine the extent of usage. One, you can have a car that is 1 year old and another car that is 6 months old or 2 years old, but the one of 1 year old is a chunk. You can't compare it to a 2 year old, depending the person who was using it. So looking at it, we had a challenge because on the various documentation people were giving us, importers, taxpayers, when they import, they used to bring fraudulent documentation. And remember, it was then most documents were manual. We were not digital as now, where you could get these documents from Japan or from other partners. Everything was manual. So during that time, a research was done widely that came up with this issue, what we call CRSP. Where in CRSP actually is one of the evaluation method, which is method 4, that we call deductive value method. The deductive value method, we look at it from when we imported an item X. This item X, when it's new, it retails 1 million here locally. So if it retails 1 million here locally, then we work backwards to arrive at the landing costs, what we call the FOP value at the port of importation, maybe in Mombasa. So when we look at that, then we use that one as the customs value and we compute taxes. So from the research that was done, it was established, and actually this was involved in various aspects. Those people who are in the sector who have done actuarial science, they understand how that one is done. And it was established that a vehicle that is about 0 months to around 6 months could depreciate 5%. The same, if a vehicle is over 6 months, it will depreciate maybe at 10%. If a vehicle is greater than 1 year, but less than or equal to 2 years, it will depreciate 15%. Then if a vehicle is greater than 7 years, but less than 8 years, it will depreciate 70%. So based on this, these rates, we apply now what we call the CRSP, where we are looking at this car is a Toyota Land Cruiser. This Land Cruiser, when it's new, if you go to Toyota Kenya to buy it, it costs you 20 million. Then Toyota Kenya could have incurred some costs. So we remove those margins, we remove the profit margins, we remove the taxes that you paid at the port, then we arrive at what we call customs value. So this customs value, then we depreciate that value depending on the age. If the car is between 7 to 8 years old, we depreciate it by 70%. If it is between 6 to 7 years, we depreciate it by 60%. Then you arrive at the customs value. So once you arrive at the customs value, then the next step is to apply the taxes. The way computation that we have done, you apply those taxes at those particular rates, and then you arrive at the taxes that you are supposed to pay. Now, for new vehicles, there are those people who are preferring to import new vehicles with 0 mileage, and they normally import them through KRA, through air. those vehicles, when they come, we don't use CRSP. We use the invoice value. But again, even these used motor vehicles, when you import them, the first aspect we normally ask, where is the invoice? Then if you provide to us the invoice, we will also ask, do you have a proof of payment? How did you make this payment? There are those who normally give us what we call TT. They say, I have this TT. But because, again, we have seen a number of cases where people falsify this document. If it's a TT, the TT is the same. What you ask the bank, they give you the same TT. But when you come to the amount section, the amount is different. There are those, again, who do partial payments on a TT. They're purchasing, they will pay maybe $10,000 this week or this month. Then come in the month of April, they will pay another 10,000. So that becomes 20,000. But when it comes to when the forwarding document to customs, they give us one TT indicating this 10,000. So we have been able to come across all those cases, and we all know all the fraud that is done in this motor vehicle. But if taxpayers provide documents and justify that these are the documents that we purchased these vehicles with, then we don't go to method 4. We directly use method 1, which is transaction value method, to compute the taxes payable, and you end up paying. So I think these are transaction, this CRSP, I think was one of the method, and I've seen some people use the KRA calculator. It's the same as been somebody transferred it that particular calculator and then computed taxes for you, him or herself. We have also seen cases where you give the clearing agent proper documentation, then they falsify those documents. We normally take external action on such cases because our act that we implement, it provides for offenses and settlement of those offenses and the penalty when you are found that you either falsify documents. So, Bob.
Okay, guys, thank you so much, James. There's been a lot of feedback coming in. I'll actually not ask you any other question about that. I see the players in the industry are already somewhere here. The questions are going to be coming to you. Before I give them that chance, guys, this is SpaceYaMagari. Remember to just tweet, let guys know where you are. If you have any questions, tweet using the hashtag SpaceYaMagari. Sir Kelvin, I know you're somewhere. Turbo Diesel, I know you're somewhere. Esnah, I know you're somewhere with your questions. So if there's any questions, that is something that I'll be coming to. So Sir Kelvin, Esnah, if there's any questions currently, before we head on to the next question.
Okay, thank you so much, Bob.
Yeah.
Am I audible?
Yes.
Yes, you are.
Yeah. So, hi, Mr. Jimmy.
Hi.
I have sampled a few questions here. Rather, I have like 7 questions. This from the timeline. I've sampled this question from the timeline, and I don't know how to go about it. Should I ask you one, then I get the response on one, and we move on? I might ask all of them at once.
I don't know what members in the space will like. Maybe they let them guide.
Okay,
I'm ready for any.
Yeah, let's go like question and answer kind of scenario. I'll go with we have this question from Kigweru. He's asking, how does KRA tax electric cars?
Good. Thank you. I have to take you back to classification. And in classification, electric cars are also classified. And I told you motor vehicles are classified under section 17, heading 87. And these electric cars, again, they are classified depending on various items. For example, They are classified depending on the CC. They are classified depending on the number of persons they can carry, etc. So these electric vehicles, if you go to that particular section, there are those that have import duty of 25, others 10%. And also most of these vehicles, they have excise duty of 10%. Initially, I think it was 20%, and it was reduced to 10% in the year 2019, in the Finance Act of 2019. It reduced excise duty to 10%. So based on that particular classification, once you have classified this particular vehicle in the right HS code, then you see how much import duty is supposed to pay. Then we do the same computation like what we did with POP. Then if it's excise duty, then it is 10%, just that, and VAT and the other taxes. So major thing, the taxation is the same, but we needed to arrive at the classification. Where have we classified this particular motor vehicle? Of course, we know there are vehicles that are locally here, they are converting. And most of them, by the time they are converting, you realize that the taxes have been paid, so they don't come to KRA for valuation and also taxation. Back to you, Kevin.
Okay, thank you so much, Jamie, for that. That was quite informative. We have another question here from Bashora. Bashora is asking, what's the purpose of the Railway Development Levy?
Thank you. I think this is it was submitted to Parliament some years back. I think it was 2013 or 2014. And this levy, by then, the spirit of then was this when SGR, they were thinking about SGR, and it was supposed to support that. But I will get the clear indication what was the thinking behind of this railway development levy. But I can again ask you to go through. You can Google what we call miscellaneous levies. It is called miscellaneous what? Miscellaneous Fees and Levies Act. If you go through that Levies Act, I think you are able to get more insight on why we levy this railway development levy, and also which goods qualify to be levied and which one does not qualify, because we have other goods that don't qualify. We have those that attract miscellaneous RDL of 1.5%. So you can all get that one under the Miscellaneous Levies Act. But once I get the proper reasoning behind why this was introduced, because I know it was introduced by the Act of Parliament. So that Act of Parliament, it gave the rationale behind why this levy was introduced. And by what I remember, it came into effect around 2014. So it's some information that we can get and clarify to the question why we normally ask for this railway development levy. Kelvin?
Oh, yeah, thank you so much, Jimmy. My third question comes from Wangala. Wangala is asking, if the transactional value of the vehicle is the first, if the transactional value is the first step and should be applied, and she has an invoice, why is KRA not following the transactional value?
Thank you. Thank you once again. KRA, actually, before we vacate method 1, we must have a justification why we are vacating method 1. We normally request for these documents that support that transaction value. And the major document that we get from the taxpayers is the invoice. This invoice we request for TT. If you paid through the graphic money transfer, you give us the TT. So once you give us this TT, we don't just accept it like that. We have to scrutinize it. We even liaise with the bank, ask whether Kelvin, you paid this money. But first we ask you to give us a certified copy from the bank of the TT. Again, we know there are people who get falsify those certifications. But again, we normally request the bank to give us a commitment on the same. So once we get this commitment, we'll compare with what you are given. So when we are departing from that transaction value, it means there's something that we have found that is irregular with your document that you have given to us. Then immediately we depart from transaction value, and then we go to deductive. Because method 2, which is identical, there are various aspects that we normally look at. For example, the physical characteristic, the quality, and the reputation. So if it's just by that, then we found somebody with an identical car, with the same reputation, same quality, same physical characteristics, then we don't go to method 4. We use identical. So if Kelvin and Bob imported the same vehicle, with all aspects the same, we use method 2, which is identical goods method. Then if we find that there is no identical car, again, we use similar. This is a case where we have new vehicles. Remember, when you have a used car, you can't say this car is identical to this. It can have the same year, same day, not year, day of manufacture, same day of registration. It can travel the same mileage, yeah? But your car has a dent on the door. Then that car will never be identical. So that's why we normally opt using computed value method, which does not raise a number of questions. And it's the same method that even we have given it to the WCO and they have accepted. Back to you, Bob. Kelvin.
Okay, thank you so much, Jimmy, for that. And also we have another question. This comes from Michael. Michael is asking, why are newer vehicles taxed higher compared to the older vehicles?
Actually, now that is a nice one. Huh? And normally, that's why people run away from the immediate question you have asked, what we call the transaction value method. When we use the transaction value method, because it's not easy to hide the newer car, normally the transaction value method taxes you pay are higher because they normally give the actual invoice. These other one they normally falsify. So because that actual invoice, the right invoice, which has not been falsified, that's actually you pay the right taxes. It is not the higher taxes, but you have paid the right taxes, what you are supposed to have paid. So it's good that you use the right documentation, because once you find that the documents that you have applied are falsified, the consequences are great, because there are those that we raise an offense, and the penalty to that offense or the fine is normally I think it's $10,000. So $10,000, that's almost 1 million. There are other offenses that attract 50% of the value So there are cases where you can find you have multiple prices. You charge 50% of the value. You charge maybe $1,000, which becomes quite expensive. And also looking at it, the delays during that dispute settlement, there are a number of delays in between, maybe trying to settle this matter. During this delay, maybe there are demurrage costs. There is what we call customs warehouse rent that you pay. So it ends up being costly for just falsifying the documents. And I can say you need to ensure that you write the documents that you get, or you give, or you attach to customs are the right documents. And if you need a further clarification, you can liaise with various emails that we have provided. Maybe at evaluation, we have an email at release point, maybe at the port, at ICD here in Nairobi, at KRA, in Eldoret. We have various email addresses that you can liaise with, or you can liaise with our KRA Care, and all those issues reach us, and we can actually settle them. Back to Kevin.
Okay, Sir Kelvin, just before you head on to the next question, in the interest of time, allow me to just jump on to Esnah. Esnah, is there any question? As Esnah gets ready, I see Alasiri, your hand is up. Alasiri, can you hear me?
Hi, Bob.
Hi, Esnah. Hi. Yes. Yes, we can hear you. Esnah, we can hear you. Kindly proceed.
So I'm just going to ask a very, very interesting question.
We can't hear you, Esnah.
Esnah, umeenda mbali.
Sorry.
Speak up.
Can you hear me now?
Yes, we
that's
can hear
better.
you.
Okay, perfect. Thank you, Mr. Jimmy, for joining us today, and thank you so much for taking us through that very, very nicely. I've just found a very, very interesting question here on how Mr. Zacchaeus is asking how the redirection of cars meant for other markets affect the implementation of your taxation of KRA's taxation process. I mean, take us through this process of redirecting a car, for instance, for somebody in, say, Uganda or wherever.
Thank you, Esnah, and the question that was asked. Yes, we understand there is a scheme where people do import vehicles on transit either to South Sudan or to Uganda or Tanzania or Rwanda, Burundi, elsewhere. And they pay taxes in those countries. Others even don't. They go take the goods to Uganda or not necessarily Uganda, to the neighboring countries. When they go to these neighboring countries and they go and maybe take a write-off, for example, take a write-off number plate from here in Kenya, then they pandicate it in that particular car and they easily drive back. And we all know, you have read all over, you have seen what has happened. A number of these motor vehicles have been confiscated because we have a full-fledged department that looks at those particular motor vehicles. And we have actually, I think last year, part one, you saw we publicized a list of a number of vehicles that were diverted in the Kenyan market. And we have been able to get a number of them. Most of them are in the police stations, and some of them we have auctioned them. So there is a scheme that involves various players and we have been able to identify these players who normally facilitate or enable this process to go on, and the various actions have been taken. We have taken a number of them to court, and a number of them have been sentenced to jail. So there is a lot, and there is an entire scheme that happens. And I think for a good Kenyan, it's not a process that you can engage in, because you can get this car cheaply, but it is expensive at the end of the day. When you are caught, that you pay taxes as a new importation. There's no negotiable. Even if the car is over age 20 years old, we look at it. Any document that such as this car came through Kenya at this particular time and age, then taxes are paid at that time of importation. And then, of course, it's the general knowledge that KRA works with other multi-agency team to cover some of these. We also work with others like Interpol. This is the common knowledge in the public knowledge. So we get all this information all over. So I can say it happens, but we have come across a number of them, and I can request, if you know others, you can share with me. We ensure that these people, we bring harmony in the sector. Back to you.
Okay, thank you. Just another quick question before we move on to Bob or Kelvin or Alex. Dr. is asking if there is an implication on taxes for one to own a car with foreign plates. For example, the Uganda and Tanzanian plates we see here locally.
Thank you. What I could say is that when you import, not only importation, the foreign with a car with a foreign number plate, by law it is called a temporary importation. You are coming to the country on temporary basis, either on a business trip or you are on a work permit, or you are here on a feast. So when you come to the country, there are some documentations that you normally fill at the point of entry. At the point of entry, either or at the border station. So this documentation you fill, there is a fee that is normally charged. This fee is based on the engine capacity of the vehicle. There are those that we charge, I think, $21 per month. And there are those that we charge around $30 per month, depending on the engine capacity. So those are the charges that we normally levy, not taxes, but those are charges for you bringing this car temporarily into the country. And of course, there is a period that is allowed for free. I don't remember well, but there's a period that's allowed for free. Then secondly, there are conditions when you fill that particular form, and this form we normally call it a C32 form, that you can renew that temporary importation to a number of times. I think it's 3 times. Subject to that, you can't renew more than that. So if you are given 3 months, then you renew, that is all. You can't renew more than that 3. Then, when you are renewing, you can drive to any nearest customs office, either at the border, if you are near the border, or you can come to Times Tower here, you park your car. We have our officers who sit at the ground floor, first floor on the lower wing. They can be able to do it for you. I think I have answered that. I don't know whether there is any other.
Yes, I have one.
Yes.
question would be, at what point does or is someone allowed to bring in a vehicle tax-free? I've also seen guys cars from UN, then they say, I'll sell you at this much, but you have to go pay KRA. Would you mind just shedding some light on the same?
Thank you. I think that's two questions in one. One, I look at the diplomatic vehicles or vehicles with people with the privileges. For example, you have a friend who works in UN. They have some privileges when they are importing. They don't pay taxes. And even when you get the logbook is clearly indicated. Maybe duty, none, where you see duty either paid or none. Or some other logbook, they are written, customs clearance required before transfer of this vehicle. So when you want to buy this vehicle, the person who is selling it, or yourself who has purchased it, of course, when you do an application to the Commissioner of Customs, then you attach a logbook, of course, a copy of the logbook. And the logbook will, of course, indicate this vehicle, the engine capacity, the make, the engine, the chassis number, etc. Then Customs will give you a computation of the taxes that you are supposed to pay. So once you get those computation, then the next step is to liaise with the clearing agent and do a customs declaration. So once you do the declaration, then you proceed and do payment. When you do the payment, then the declaration will be processed. Once processed, then that information will seamlessly migrate to NTSA system, and then they will generate a logbook for you. So that's a case where we are looking at diplomatic vehicles. Not necessarily diplomatic, but people with the privileges. This include people with the disabilities. When they import, they are normally given exemptions. These exemptions, when they want to sell, because they are not at any point, they cannot have more than one vehicle. So if they want to acquire another one, they have to sell this one and then apply for another one. Of course, there is a period when you are supposed to purchase a car and be with it until that period. Then that's when you can qualify to have that particular vehicle. Then secondly, the second part of that question is what we call returning resident. There are those people who have worked in abroad for a particular number of years as defined by law. But then when you are coming back, the Act allows you to import one duty-free vehicle. So this vehicle should meet particular criteria that has been defined by the Act. So that criteria, if you go through and the 50th issue, I know you people, you can Google the 50th issue of East African Customs Community Act, Management Act, and you get, I think is Part P, and I think should be item 5.3c. It highlights the conditions of returning resident, what you need to acquire, to possess for you to get that status of a duty-free motor vehicle. So if you are returning resident, for those brothers and sisters of us who are in this space, maybe they're in US, they are in UK, you are returning home permanently to stay in Kenya, and you want to come with a car that you are using there, then the law allows that one. So that's another condition that you can use to benefit from duty-free. Then under this returning residence, because I saw one of the questions that I was supposed to tackle. We have those people who are coming from countries that have left-hand drive motor vehicle. Remember, by law here in Kenya, we don't allow. There is a standard we implement or we enforce. That is Kenya Bureau of Standards standard that we implement does not allow left-hand drive vehicles here in the country. So I think around, don't remember when in particular, the president allowed people to import, those who are owning left-hand vehicles in the countries that drive left-hand vehicles, they can change to get the one with the right hand. Then there are conditions that they apply, and then they can import that new car permanently. They can import that car to Kenya. Some of those conditions include first, you must be changing your residence. If you are in UK, you must be changing your residency to Kenya permanently. Yeah, but not sio yule mtu wa kukuja tu Kenya na tembea na arudi, aje gari na arudi. Of course, we have mechanism to know or to tell that. Then there is another requirement, that what I told you on the 50 SECU. You must meet the requirement of that 50 SECU. Then you must have owned that car in that country for at least 1 year. At least 1 year. Then you must have, I think, a proof of ownership that you own that car. So you need to show us a proof of ownership, and you must show us that you disposed this car. You owned it and you disposed it. So you must have that. Some of this is a sale agreement, and maybe you can support it with a bank statement indicating this one I sold this money and this is what came to my account. Then another one is the CRSP of the right-hand vehicle that you want will always be less or equal to that of the left-hand vehicle that you own. So ensure that you need to confirm in advance that I'm importing this car. I used to own this one. What with the CRSP? Because the new vehicle that you want to purchase or import should have a lower CRSP than what you used to drive. Then these vehicles, huwezi leta pasi ukuje kufanya kutoka town kwenda Rongai. We can't allow a pass or a mini pass, which has a seating capacity of 13 passengers. Then you should also, the loading capacity of that vehicle that you want to import should not be more than 2 tons. Of course, we know vehicles with more than 2 tons, what type of vehicles are these? So those are some of the conditions that of course, again, the 8-year rule should apply, because that's a standard we implement on behalf of Kenya Bureau of Standards. So those are the conditions that one should meet. And once you meet all those, you qualify to get a duty-free vehicle to the country. So if you are coming, I've seen a number of cases, I've handled a number of cases where we have accepted, and also we have a number of cases where we have denied them because they don't qualify with the provisions that have been set. Thank you.
Thank you so much. Just a quick one again, just some follow-up. When you say they are tax exempt, so is it the VAT, excess duty, RDF, or is it specific taxes that you are exempted?
All the taxes are exempt. What you only pay is registration fees, vehicle registration, and other agency revenue, like MSS revenue. That one you must pay and that.
Shukrani
Okay.
sana. Thank you so much.
Thank you, Tarbo. Thank you. I'll be opening the space to Akina Motogari, Akina Rutun, Akina Alasiri. But before that, Mr. James, does
Yes.
KRA offer advisory to the government? Because what we are gathering from this is that KRA is more of an implementation of what is already there in law. Some of these things you're mentioning is that they came into, like the railway fees you're mentioning, they say they're coming in from around 2013 to 2016, if I have it right. So these are acts that were done in Parliament, and then KRA is left to enforce. So that means that KRA sit down and tell the government that, this is overtaxation. Because I'm just looking at this model that you just used, the example of the 1 million unit, and I'm looking at it, and it seems like you're compounding on the interest. You get 1 million, you add 250, you tax it. Then you get 437,500 on top of it, you tax it. What is this about? Is this model calculated also coming from the act, or does the KRA come up with it?
Thank you. I think those are the standards of computation of taxes. And I think across the region, those are how the taxes are computed. And of course, there are various acts that support that on how the computation is done.
So it's based on an act?
Not necessarily an act, but I will check on the computation of taxes, but our EKIMA, yes, explain clearly on how these taxes are computed.
Can this computation be changed?
Yeah?
Through an act of parliament or through parliament process?
No, these are ESC level. This is at ESC level, yes. It actually outlines clearly how these computations are done.
And now, KRA, do you offer advisory to the government when they are bringing some of this act into play to you, especially telling you to tax electric vehicles? For instance, I'm just looking at an electric vehicle that is being charged a railway development fee and fuel levy and such like. Do you sit down and tell the government some of these things are exorbitant rates, or do you just implement because it comes from the Act of Parliament? Do you ever get a point to sit down and tell Parliament, this is not right, this is right?
Thank you. And I think for that question, next time I would like to invite also our policy people, because they are people who normally set these policies and represent us at our matter ministry, which is the Treasury. And we do give the implications of these policy decisions to the economy. And remember, before this thing comes to be the act of parliament, it goes through the various people that we have nominated or elected to represent us. And they normally debate on the same before it is passed into the law. So I know that the constitutions allows public participation, and this is a way forum that members of in this space or others, they can also give views during the budget cycle. But I know during this budget cycle, when maybe members are called somewhere to give their views, people don't normally go there to give their views. I think this is the right time to use this opportunity to engage the government and also some of these policies. For us, we say the key is we do give our opinion, and our key role is also, as I said, is to implement these laws that have been passed by Parliament.
So what you're really saying is that the ball is still back to us as Kenyans when it comes to us selecting the leaders we send to Parliament, because some of these things are passed with their knowledge. And it's really start hitting us when we start realizing that some of these policies would have been better done, and then were not done because something needed to be effected in the regime or in some government policies. So I think that is what I'm gathering from you, that it goes back to the people, and the people representatives are in Parliament, they're in Senate, they're in any representation house that we have in this country. So do you reckon that if we get it wrong at getting the legislatures and the people who set the laws, then we get it wrong all through, including taxation?
No, I think your guess is that one. I think I leave it to you and the members on the space to comment on themselves.
Okay, so Mr. James. Okay, now I wish to open the space. Guys, thank you so much. This is SpaceYaMagari. We're just coming into a bit of a wrap in the next few minutes so that we release Mr. James. So I'll be giving each of the speakers in the session, Ruthless, Arasiri, Rutune, Motogari, and if you have any question, you can request for the mic. Tweet using the hashtag SpaceYaMagari. Let's keep this thing going. Let's keep the ball rolling. Alasiri, your hand is up. You can go first, then followed by Ritune. Ruthless, you're going third, then Motogari. And as we keep on accepting all the other speakers in the house. So Alasiri, you may go.
Bob, just a second before Alasiri goes.
Yes.
Mr. James, I've come across a really interesting question here on the timeline. Mekatilili is asking, how do you tax electric vehicles based on their CC? Yet these are electric vehicles. They run on motors. They don't have engines.
No, I said we tax them based on the tariff classification, and it is very clear. If you go through that harmonized system, it is very clear where these vehicles are being classified. For the excise duty, it is actually 10% for all electric vehicles, irrespective where they are classified.
Okay, thank you so much, Jimmy. Just the one last one. This coming from Tilingi. Tilingi is asking, during importation of vehicles, let's say for the persons with disabilities, how do you handle that, basing on the issue of tax exemptions?
Yeah, I think persons with disability, they also do benefit for exemption because they are provided for under 50 CHU again. If you look at our Act, East African Community Custom Management Act, the 50 CHU to that Act, Part A, and Item 8 in particular. And also you look at the first CHU, Part 1 of that Act, Section A, Item 39 of the VAT Act. It provides for that persons with disability are given exemption for the vehicles. Of course, there is a process that we normally undergo through. One, you must make an application to Commission of Customs in writing. Then you need also to provide some documentation like the medical certificate from a registered doctor, of course. You also attach copies of certified copies by a commission of oaths. So that certificate, you attach a copy, a copy maybe by a certified copy by the commission of oaths, and you present yourself to the commissioner. The commissioner meaning now you to the people that are representing the commissioner physically, because we have seen cases where people try to manipulate the documents. So you present yourself physically. No, before you present yourself physically, you present the original documents. Those original documents that that were certified, and a copy from the document. You present them during the interview with the representative of the commissioner. And I'm assuming the person being interviewed is the person who is importing this car. That is the person with the disability. Then you must have the original letter. When people with disabilities have an association, so you must have an original letter recommending you from the Association of People with Disability or the National Council of Persons with Disability. So then, for physically disabled person, you need to have a copy of valid driving license. And in case of visual or mental or hearing impairment or any other impairment, maybe that will be dealt with case to case, one is allowed to nominate a driver. Of course, that's why somebody will ask me why if I'm blind, how would I drive? So you nominate a driver, and that person that is going to drive you will surrender that driving license. And also, you don't just nominate by a word of mouth. Ensure that there is a nomination letter to that person, from the person with the disability. You give the driver a nomination letter. You have nominated person XY to be my driver, then you give details. Some of the details that you give is the driving license. You also attach a copy of the ID and also an affidavit to confirm the same that you have nominated, so and so. Then you also give us a copy of a bill of lading, and this bill of lading should be addressed to the applicant. The applicant is the person with a disability. That bill of lading should be addressed to that. Then you give us the invoice or a pro forma invoice. All these documents again must be addressed to the applicant. Of course, we can't allow you to benefit duty-free if you are not compliant. Even if you are disabled and you are not compliant, we will not allow you. So you must give us a tax compliance certificate. The tax compliance certificate does not necessarily mean that you are paying taxes. You might be unemployed, you have no income, but you are filing nil returns. So if you are filing nil returns, the income you are getting maybe is from farming, nil, or somebody has given you money as a gift to go and purchase a car, but you must be filing nil returns at least for you to get a certificate, tax compliance certificate. So ensure that if you are not in employment, active employment, ensure that you've been filing nil returns. And if you are in employment, ensure you are filing returns and get a tax compliant. If you are a director somewhere in a company, of course your company must be tax compliant where you are a director, and plus you are safe for you to qualify. Then you also give us a cash remittance transfer. If you paid for the car, of course you will have the remittance fees, that's the TT and the rest. And then we normally require a bank statement for that particular person. Of course, these are some of the documents that we need to counter check. If you have filed nil returns and you have a bank statement, so you have 10 million, 100 million, what is the source of this money? Then you give a copy of the national ID of the applicant, and there is that ID card that is given by national councils of people with disability. So when you do that, there is a tested drive. This tested drive is normally done in the presence of a customs officer, maybe at the point of entry, or at the point as a point of entry, maybe Mombasa or KRA or ICDN. Then one condition that you should also know that once you have benefited for this duty-free vehicle, when you want to import another one, a replacement is normally after 4 years. You must use this car for 4 years, and once using for 4 years, then you can also sell it, but the person who is buying it, because they are the privileged person, will pay taxes at that time of sale. So you must use this car for 4 years. And then after that, you can be allowed to dispose it and also import another one. So those are the conditions that you normally look at. And we have various contact lines that you can get in touch with us to get more clarification, maybe when you want to import that particular car. Thank you.
Okay. Thank you so much, Ndege. I think Alasiri can... Yes, Esnah?
Mr. Jimmy, just before you go, I wanted to know if this tax exemption applies for when a person living with disability wants to import cars in bulk with the intention to sell.
No, that one does not apply. The exemption normally applies to you, the car that you are importing to use. That's why you are allowed only one car for 4 years. So if you are for business, that one will not apply.
Okay, thank you.
Jimmy, if before you we let you go, I want to find out when there have been issues or cases where people have bought a car and you find the logbook has been labeled non-transferable. Reason could be maybe that the vehicle had not had its taxes paid. Now, who should be paid? Who pays for these taxes? The person who buys the car or the person who imported the car initially?
Thank you. I think when you are making an agreement with the seller, you need to confirm whether the taxes were paid. And if they were paid, what you are purchasing, that car includes the taxes. Then you can make a negotiation at that level. So anybody can pay, depending on what agreement you have, seller buyer agreement.
So is there a way somebody can also check, apart from the logbook, are there ways to find out if the duties for a car were fully paid? Because we've noticed that some unscrupulous dealers look for ways to cut corners and make their cars cheaper so they can sell faster. Now, with that comes a few corners where you come to find out later on that your car has not been, your duties have not been fully paid.
Yeah, it is true. Of course, you can liaise with us. We can confirm to you whether the taxes were paid. And sometimes we require some additional documents for us to confirm that. So you can write to the Commission of Customs a request to confirm whether the taxes were paid. You'll get a confirmation. If they were paid, you proceed and do the transfer. If they were not paid, you process the car using the customs processes that we have highlighted earlier.
Okay, thank you very much.
Okay, thank you so much, Solo, for that. Before anyone else speaks, I think, Bob, we can have now Alasiri going. Alasiri.
Yes.
Bob, actually, my question has been answered. I had a question on disability, on maybe, maybe he can just tell us which taxes are normally people with disabilities, which taxes are they exempted from paying? Can he guide us on that?
Actually, they don't pay all the taxes other than a registration fee and MSS levy.
Okay, thank you.
Yes.
Ruchul, your hand was up.
Yeah.
Jambo,
everyone. To Mr. Jimmy.
Yes.
I have a very crucial question.
Yes, welcome.
There are cars that they are available locally.
Yes.
And we try import them. So, and when we're trying to do the duties, calculation and all that, these cars don't appear on either of the CRSP is available. 2019, the halted one, 2020. Mm-hmm. And we try very hard to come close to whatever value you guys try to make. Let's say, for example, a CX3. A CX3 is not available on either of the CRSPs. And what you guys suggest is usually that we try get something like a CX5 or a CX30, which a CX30 also is not in the 2019, it's in the 2020, right? So
Yes.
when we do that, we some of us were taken for valuation, and a new CRSP is given out. That's something called cars which have undergone the ruling. Why do you guys not provide us with a list of the ruled cars around? Because, for instance, right now, if I am to quote a CX5, a CX3 to a client, and I am not in the know-how of the current CRSP which I'm supposed to use, I quote it lower. When I come declare that duty, because I'll have just used the highest value in the 2019 one, we end up getting penalties and all that. Yet most of our clearing agent guys don't have those ruled cars. Let's say the BS9, the A180, the CX3, and many others. Can that list be uploaded on the downloaded the section on website on the downloads kindly?
Okay, thank you for that. And I think what I can say is some of these new models that are come across hello?
Yeah.
Some of these new models that we come across, I think it's important that you pay genuine. Let us not go to discussion on CRSP. Share with us the values that you purchase, the importation documents, your transaction documents, and we could be easily dispense. And you support that transaction documents, and we can easily dispense the same and finalize it without even going to discuss on the CRSP. But where one fails to provide this, yes, we have various rulings that we have made. We have people who purchase those cars in the country, either new, and that's when we look at those similar methods. So we combine it with deductive, and we arrive at the value. So this information we can give you upon request, but I think again the request that you have made that we can include in the downloads, I think is something that we'll consider and include in the downloads that you can easily access.
Thank you.
Thank you.
Okay, Daktari, I see your hand is up, Daktari. Daktari?
Yes. Thanks, Bob. Thanks, Jimmy, for a very informative session. I just have a quick question regarding there are these vehicles, maybe the government is selling vehicles, you get them registered temporarily as XGK vehicles. What is the procedure of maybe having them formally registered and the tax computation around it? Thanks.
Thank you, Daktari. For these vehicles that are normally government-owned, most government-owned, and there are those that are sold by military, either by what we call PATUK, British Army. And we have other vehicles that we call projects, like when the Chinese do their projects here in the country, at the end of the project, some of those goods, if they are not transferred to another project, some of those goods are disposed locally. So what happens if you happen to have purchased that car and you are aware that taxes were not paid? You write the Commissioner of Customs requesting to get the computation of the taxes. The Commissioner will compute the taxes that you are supposed to pay, then we write to you. And again, the same process goes. You get a clearing agent, and we'll do the custom documentation, and then the vehicle will be registered after custom documentation. Of course, there are those other bodies that before they sell the vehicles, the general public, they write to the Commissioner Customs, they give them the value, and then they pay the taxes. So by the time you are going to purchase, you are purchasing this car with already taxes paid. So you are given a logbook. What you only need to do is to do a transfer. So in such a case where you are doing a transfer where taxes have been paid, and somebody informs you that, what you need to ask him is to give you a logbook, the original logbook, and also you should get the customs entries. So once you have these customs entries as a proof of payment of taxes, that is what you present to NTSA, and NTSA will allow you to do the transfer to your name. Back to you.
I hope that answers your question.
Yes.
Dr. Thank you. We have two more questions, one from Ruthless, and then we have the Duke. So Ruthless, you go, and then the Duke. Orem?
Thank you. Mr. Jimmy, thank you for being patient, being accommodative in this space. Actually, you've talked about something that I really wanted you to expound on. Maybe you are not in the right capacity to really answer this question. But you are very aware that in 2020, that was around July, the High Court in Mombasa suspended the CRSP. That you guys proposed, and car dealers said, no, this is not what we are going to use. I really wanted to know, because the elephant in the room in that taxation system of KRA is the CRSP. Other things like railway development levy, things like that, those are minute and flimsy taxes. But the main thing, for instance, I'll ask this question. Is it a tendency that the carriers adopted that when they see that wananchi are really buying a certain car, they increase the CRSP? 2, a car like Honda Fit Hybrid, they are cars which are not being manufactured locally. How do you arrive at the CRSP? For instance, you've said that you will go to Toyota Kenya, the local dealers, to actually get the real values of the current retail selling price of this particular cars which are not being manufactured in Kenya. The last thing that I want you to think about is that don't you think that the taxation system in this country is very punitive, especially to car buyers? If the world is moving towards electric and hybrid cars, what are some of the strategies or policies in place at KRA, because you are an advisor to the government, that would really ensure that we get quality cars, or we can easily afford electric, hybrid, and mild hybrid cars? Thank you for your time. Thank you for coming.
Thank you. And I think the issue of CRSP, yes, we have a court case and it's still pending. It has not been finalized. I don't think whether it's good to engage on the matters that are in court. But for vehicles that we are saying that they are not manufactured locally or they are not found locally here in Kenya, the evaluation method allows us to do market survey. And through this market survey we are able to determine the values of these particular vehicles. And also, we said we have other methods of valuation where we have cases where most of these cars might have been imported. the partner state. Remember, we are implementing EKIMA, and EKIMA is a partner state act. We do survey and market survey, and we are able to come up with the applicable CRSP. So what we do behind the scene is a lot, that we end up getting this CRSP for the vehicles that are not, we don't have car dealers. We not necessarily rely on car dealers, but we also rely on other things. But also we do our due diligence behind the scene to confirm the actual taxes that were paid. Not taxes, but the actual money that was transferred to various countries abroad. Once you get that information, then we are able to guide you, and that's what we do. On the policy aspect, I think we have talked about this one, and we say that you have more role to play because the Constitution allows for public participation. I can confirm, as we do participate during this budget cycle, but you also have your representative or yourself, or as an association or a space in Twitter. You can also try to present some of these issues during the budget cycle. And once a policy is accepted and passed as an act through Parliament, then we'll come back and enforce it. So we have seen cases where taxes have been raised, we still enforce. We have seen cases where taxes have been removed from some items, we still enforce. Like the time when VAT was taken to 14% for Corona, we enforced that 14%. We ensure that we correct that 14%. When it came back to 16%, we still ensure that nobody will pays for that 14%. Yeah. So I can say that you have a big role also to play to ensure that your concerns and the concerns of Kenyans are captured elsewhere.
Thank you. The Duke, you have a question as we wrap it up. The Duke, your hand is up. Okay, so the Duke, since the Duke is not with us, thank you so much, guys. It's been a good session. I want to now toss the ball to Sir Kelvin, Turbo Diesel, and Esnah for any comment as we now head on to the end sessions. So I'll start with either of the three, Sir Kelvin, Turbo, and Esnah. You have the session.
Okay, thank you so much, Bob. I'm thinking, should we continue the question and answer? I think I have like 2 left questions here with me.
For the interest of time, I'm sure. Yeah?
Yes. You can ask the 2 questions.
Okay.
Okay. Thank you so much, Jimmy, for that. Okay, the first one, it's coming from Sean Kimani. Sean is asking, how did you come up with the bad month method of tax computation for, say, a 2015 model registered in August, but imported right now will be considered as a 2016 model for the purpose of taxation?
Mm-hmm.
Yeah, so he was asking, how did you come up with the bad month method for the tax computation?
Actually, it is not it's not way that we came up with a bad month. We are actually implementing the CAPES standard, and that particular standard requires that I think I remember the standard when I think is you can get through CAPES standard code of practice for inspection. There is something that is called KS 1515 of 2000. So in that particular standard, hello?
Yes, please proceed.
In that particular standard, it says, I think vehicles less than 8 years old from the year of first registration. Now, these vehicles are normally inspected maybe by various agencies before they come to Kenya. And in that certificate of inspection, there is the year of manufacture and there is the year of first registration. A car can be manufactured in 2022 January. It stays in the showroom, and it is when somebody purchases it, maybe in April 2022, that becomes a year of first registration. The car can be manufactured today, this month in the showroom, and the same month is purchased. So that means the year of manufacture is the same as the year of first registration. So looking at that certificate that you have given us, and this standard says less than 8 years. So we compute those aging based on this standard from the date of first registration to the time of importation. So the time of importation here is the time that you have done a declaration, you have entered the goods, and that declaration has been accepted. You have made a payment, and the declaration has been accepted by the commissioner. So is the time of importation. So once that one is done, then we compute the age of that particular car. So it's as simple as that. It is not a formula that we came up with, but only implementing this standard, AS 1515.
Okay, thank you so much, James, for that. Just the last one is coming from Michael. He was asking, what's the criteria that you use in setting the CRSP?
As I said earlier, when we are doing CRSP, we have various methods. We do market survey. We also look at those vehicles that we have accepted, their values, maybe the new vehicles that have been imported and their values have been accepted. We also liaise with various dealers to give what are these vehicles retailing, but not necessarily that when we liaise with them, we use their values at the CRSP, but they give as an indicative value. So it is a various combination of a number of research that we do, a market survey, yes, and maybe from other vehicles that we have accepted through identical, maybe vehicles that have been imported, and we accepted those values. They form a basis. Thank you.
Okay, thank you so much, Jimmy, for that. Those are my last two questions. Esnah, I think you can go if you have any trouble.
Yeah, I can go. Esnah, go ahead.
It's okay. Go ahead.
Ladies first.
Okay, I don't even have any more questions. I think they've been covered. Thank you, Mr. Jimmy. So you can just go ahead, Alex.
Also, Shukrani. Questions near almost indefinite, but just time I think we'll have to wrap it because still a week. Mine is actually really to say thank you so much for coming in. You've answered most of our questions. But we've done the calculation. We are getting a lot of numbers, but just like you've said, a lot of these decisions actually are more based on us, the sort of leaders we elect and things like that. And you're a enforcing body. You just don't make the taxes, which is really interesting because people say KRA and Umisa, yet just like you've said, these taxes are coming from the government. Again, thank you so much for coming. Thank you for everyone thank you for your questions. Yeah, so as we proceed, Na uwe na usiku mwema. Bob.
Okay. Thank you so much, Tabo, for that. Yeah, and also from me, from and as well, Jimmy, we want to thank you so much for making time to be with us. You've answered most, if not all, of our questions, and we are grateful for having you on board. Thank you so much. We'll try and look for another session if we can have with you, and I hope utapatikana pia. And yeah, they mentioned something about bringing your policy department on board. Maybe we can have more engagement on that, and we see how to go about it. And yeah, it's all we are grateful. Shukrani sana from SpaceYaMagari. It's been amazing having you on board, and we've really learned a lot from the tax department. And as Alex amesema, hizo calculators zetu, by they're populating a lot of numbers, because I was on your website the other time, and nilipata close to 65% in taxes, the value of the vehicle. And yeah, it's been amazing having you on board. Thank you so much for making time.
Thank you, Kelvin, Bob, and all the members on this space. We appreciate the questions that you have asked, and also the concern that you are raising. Actually, some of these questions is what can always make KRA be a pet institution and improve our services that we do rent to our key stakeholders. When you import these vehicles, you are stakeholders and the one who make us to meet these targets. And I think it's good that we continue having such engagement. I know there are a number of questions, members, various members on this tweet who had asked, and we were not able to handle them because of time. We are always available to another time and engage and also discuss more on this. As we said, some of these questions that you ask, we can also be handled well by our policy team, both from customs and from DTT and the entire KRA. We have various policy teams that can handle some of these questions that you need, and they can even direct you on what you're supposed to do. So I really appreciate for the chance to discuss some of these issues, and I wish you all the best and good night.
Good night. Thank you so much. Thank you, Mr. James. Kwaheri sana. Asante sana kwa kushow up kwa SpaceYaMagari. We are happy. Sir Kelvin and the team, now you have the space. Tunaweza endelea na conversation kwa wale ambao wanaendelea, but thank you so much, Mr. James. This space has been recorded. We hope to have it up with you guys very soon in a podcast, so expect to have it. Follow SpaceYaMagari, follow Jimmy, talk to them at KRA. They have contact ways you can be able to reach them in case you have any questions. Follow any of the speakers in the session. This is SpaceYaMagari. It's been real. That was a tax edition. And with that said and done, I think tumemaliza maneno ya tax. Hatujafunga conversation. The conversation still continues. If there is anything, tunaweza endelea kutoka hapo. So Tarbo, Esnah, Alasiri, Rutun, thank you, Janet, naona mko wengi, Michael, Johnson, Chieftain. The conversation can continue. Let's expect to have more of this. And I think with that said and done, let the war between the Land Cruisers and the Range Rovers continue on SpaceYaMagari. Thank you.